Hey, everyone, and welcome back. Today, I've got Shawn Moore on the show. He's an active real estate investor, the host of the Vacation Rental Revolution podcast. He's the founder of Vodyssey.com, the #1 vacation rental investing education company in the world. He's been investing in real estate for over 22 years. I'm excited to have him on the show. Shawn, it's nice to meet you.
Thanks
Welcome.
for having me, my man. Appreciate you having me. It's always fun to have conversations about real estate.
It really is. We're going to dive in today. I'm excited to talk to you because I've always had this kind of side hobby that I wanted to do with short-term rentals, and I never got to do it. I'm not going to spoil what I want to do because I want to get into it, and eventually I do want to do this when I have some time. But before we jump in, tell everyone a little bit more about your background.
Yeah, so I've been a full-time real estate investor now for going on 23 years. This is my 23rd year as a full-time investor, bounced around a lot of different asset classes, and kind of stumbled upon short-term rentals back in 2006. So we've been doing it for a little while. That feels like a dinosaur in the short-term rental world. A lot of people, they become very popular the last 3 or 4 years, but they've been around for quite a while. And so really started off like a lot of people in the kind of the wholesale fix and flip game, do a lot of development stuff. And as I was going through, I had an old guy. I was bragging at one of the local real estate investment club meetings, and what a big shot I thought I was with my fix and flip business. And this old guy put his arm around me and said, "Hey, Shawn, you really have to quit referring to yourself as a real estate investor." He said, and my jaw about hit the floor. My ego was like a gut punch, and I was really mad at this guy named George. And I was like, "What are you talking about, George?" And he said, "You don't have anything that creates passive income. You don't have your money into anything. You have a job fixing up houses, reselling them, fixing them up, reselling, going and buying land, developing it, reselling it. And while you make decent money doing that, you don't have anything set up to give you passive checks that is going up in value and having somebody else pay for, aka long-term rentals, multifamily, things like that." And so that was back in the early 2000s. And that really kind of opened my eyes, or kind of mid 2000s, opened my eyes to say, I might need to start looking at different long-term investments, and bounced around a little bit in some different long-term investments with single family rentals, great asset class to be able to get into at the time for me. I understood them with fix and flip stuff. And ultimately just kind of, felt where I felt like I was kind of finding my lane. There's real estate is a huge ocean, lots of different vehicles, and trying to figure out what I really wanted to do, and stumbled upon short-term rentals back in 2006 and realized how well they performed in a really steep recession. And I wasn't really planning on focusing on that asset class until the end of the recession, until 2011, 12, 13, when I realized, and looking back, how well it actually performed versus some of the other assets I was in. And it was interesting to me because we would think, okay, a vacation rental during a recession is not going to do that well, right? And it was kind of eye-opening for me at that time. We really started diving into this as a mainstream asset that we could really focus on and build our portfolio around. So it's been a wild ride, a really fun ride, lots of ups and downs along the way, but we've had a lot of fun with it.
So it sounds like your eyes were really open. One, that initial conversation with, I think you said his name was George. Meetup. And then second was around 2010, 11, 12, when you were comparing how your vacation rentals had performed with the other asset classes that you'd been in. And you were like, wow, I can't believe that this, a lot of people, when they think vacation rentals, are like, oh, as soon as this, economy contracts and people don't have any vacation money, that's the first one. The hotel industries, those get hit the hardest. The vacation rentals get the hardest, but that wasn't you. It doesn't sound like.
No. And what I realized was, in this one particular asset that I had bought, it was kind of looking at the case study with it. I bought it in 2006, really at the very top of the market. And so I lost value. My property went down in value, like everybody else's properties went down in value, but it performed really well, cash flowed really well. Mm-hmm. And it cash flowed to the point where the cash flow kept going up and growing way more significantly than some of the other assets that I had. Right. Mm-hmm. And they were steady, which was great. I like steady. I like boring. Boring makes a lot of people rich. And so there's nothing wrong with that. But I realized that cash flow actually kept growing, even though the house went down in value. But also then when things started to rebound, then it really caught itself up and had a phenomenal rate of return on it when we looked at everything. And so it was, but what I realized was people don't stop vacationing during times of contraction. A lot of times people are a little more stressed out. They're a little bit more like, hey, like I remember hearing people all the time just saying to me, we just need a getaway. We just need a weekend to just like relax and like disconnect for a minute, because they're so stressed in their everyday lives. And so they want to do this. The other thing that's interesting about short-term rentals, they can be very economical ways to travel, because you can go with other people. And so your actual, and most vacation rentals, they actually have full kitchens in them. And so that's a huge expense when you travel, is going out to eat for every meal, right? For a lot of people. And so it's actually, I realized that one, people wanted to get away, even during some hard times, but also it was an economical way for them to get away, because we were outside of a major metropolitan area, outside of Salt Lake City, Utah, and in the mountains in Utah. And it was a drivable distance, right? We were only a couple hours for where most of our customers were coming from. So they didn't have to jump on airplanes. They didn't have to spend money on restaurants the whole time they were there. And they just wanted somewhere they could go disconnect. And we had a property in a mountain lake community, and it turned out awesome.
Yeah, no, it's definitely been put on the map, especially with these VRBO companies and Airbnb companies. And, my thoughts around it were, oh my God, this is going to become a commoditized thing, right? Just like any other product that comes to the market. You had the GoPro camera. It was super cool. I think I've still got mine sitting in the closet. And what happens, you get this amazing product. Everyone comes out and kind of mimics it. And so I'm excited. I want to jump into talking about kind of the top-down approach. One is starting with like how you analyze markets, and then we'll kind of slowly drill this conversation down into how you differentiate the product. So how do you go about selecting which markets you're going to focus on?
Yeah. And one, we always want to be able to underwrite the investability of a market, right? The investability of any market when it's in real estate is, how much are you paying for the asset itself? How much are we paying for properties? And what is that ratio of income that you can generate with that asset, right? What does that ratio look like? That kind of gives us an overall like investable, is it an investable market? With short-term rentals, what's really interesting, when you start to peel back the layers of the onion, you realize there's a wide range of revenue that these properties make, wide. And we'll dive into that as we kind of, the reason for that, which you hit on, of how to not be a commodity. But what happens is when there's thousands of good markets across the US, and people always say, well, what are the top 10 markets? That's what everybody wants to know. How do we analyze the markets? And a lot of publications will put out the top 20, the top 100, whatever it is. And what makes a really good market is, one, for short-term rentals, what are the profit drivers? What brings people to the area? And are those profit drivers? Usually there's more than one. Usually there might be a really major one, like a national park or a beach or a ski hill, right? Those are profit drivers. Those are things that are bringing people to the area. Maybe it's just a backyard, weekend warrior type community like I had when I started, which was just kind of a backyard resort community outside of the Salt Lake City market. Most people wouldn't know where this lake is, right? That I had property. Still a profit driver. And other markets might be that have profit drivers like medical centers, colleges, major events like, Coachella, like in the like big music type events. Those are kind of profit drivers that happen, that the event specifically, they'll happen once. So you don't want to buy in an area that has one event that's a 2-week event, right? It has to have something else. And so one, are there reasons people are coming to the area? And it's not all vacation areas, right? It could be, like I said, the major medical centers. That brings people in. The nurses come in on contracts. If it's a major medical center, people come in for treatments. They don't want to just stay in the hospitals. They don't want to stay in a hotel, and they're there for a minute, and they want to have the comforts of home. And so think about where are areas that have profit drivers. And then we have to look at the acquisition price versus the revenue that it generates. If those ratios line up, then we start to say, okay, this might have some legs. That it's interesting, Brandon, the first time when people say, where should I invest, when they join our mentorship program, or even on these podcasts, anytime I have that question asked, I always just say, write down the 3 areas you would love to own a vacation home. Like if you had to tell me, where would you love to own your next vacation home at, write down the top 3 areas that come to your mind, because if you want to go there, probably other people do as well. And then we can peel back the layers, see if it's investable for you.
So with your business, have you reverse engineered it? Do you start from like a top down approach or a bottom down approach or a bottom up approach where you got like a very specific target customer in mind, and then you've gotten so good at serving that specific niche that you're then going and reverse engineering that and going, which areas are they focused on? Where are they going? I live in Nashville, Tennessee. So
Yeah.
I can tell you right off the bat that bachelorette parties, holy cow. And there's so many of them, but like that's like the Nashville thing, Broadway, a lot of people who really love country music. So when I'm on Airbnb and I'm looking at all the different opportunities that are out there, it screams this. So they know exactly what they're looking for. This market, or at least the people who are savvy enough to have figured out exactly who their target customer is and who is this market serving has done that. So you're online and you're looking at little Instagrammable walls where it's bachelorette, party, and it's pink and it's girly. It's kind of cool.
Yeah.
Is that how y'all have structured things, or do you more or less, focus on like an area that, like you said, that you would like to own something in, and then try to drill down on what target customer that area serves?
Yeah, it's one, I think it's one of the best questions I've ever had. I've been on hundreds of podcasts and I've never been asked that question. And it dives into why I tell people, tell me the areas that you would like to go. And then when we dive into it further, because I do want them to take that bottom approach, right? Figure out the target audience. What's important, and that most people don't realize, when they pick the areas that they want to go, really they are their target audience, right? You should be part of your target audience. It's much easier to articulate to a target audience if you're a part of it, right? And we can be part of more than one target audience. Like I would have a hard time putting together a really fun bachelorette party because I'm not a bachelorette and I've never been to one, right? And so even though I know that that's a great target audience, I always tell people to start to make it easier on themselves until you become a really good marketer and you are able to really set up experiences for different target audiences, is select the areas that you like because you are part of that target audience. And so it's a really interesting question because I tell people to do that because of that reason. We want to identify who that target audience is that they're going to go after. And if I'm part of that target audience, if I'm a mountain biker, you and I, before we hit play, you were talking about, you came to Utah and you were doing some downhill mountain biking. If you like to mountain bike and you go into some of these, areas that are one of the profit drivers of some of the mountain biking trails, and you can set the property up to really identify to that and speak to that audience, you're going to have a lot more success. And so we look at that first, honestly, then go back to that. Okay, that's going to fall in line with the areas and how I select the areas that I'm going to invest in.
So it really sounds like almost taking what you're good at. It's almost like you're picking out your demographic. If I'm the one that wants to go and invest in so and so area because that's what I really like, if I'm really into the beach, or if I'm really into mountain biking, whatever that is, because I understand my needs and wants the most, then I can go and I can replicate that and have a lot more success because I am technically the target customer and I can build something around those very specific needs and wants. That's what you would advise people who are starting to try to do.
Absolutely. And the way you asked the question makes so much sense, but I try to tell people, like I've tried to simplify it. Instead of telling somebody, think about your target audience first, I just try to take that away from them thinking about that and thinking about, go tell me where you want to go, because if you like it, you're part of the target audience, and then we can speak to why you like it and really identify that target audience. I had a property up in one of my most profitable properties that I had in the beginning when I started off, was a property up by Yellowstone National Park, right? Major profit driver. We're 10 minutes from the gates of Yellowstone National Park. We're right on a lake up there in Yellowstone called Henry's Lake, and like right on like beach or a lake house, and everybody focused on all the families coming in to go to Yellowstone, right? It's a broad, like, okay, I'm relying on the major profit driver and my property, and then just saying anybody and everybody can come. That's what most people do. They don't identify target audience. Well, I bought that property originally because I love to fly fish, and this property is right on a blue ribbon trout lake, but also it's 15 to 20 minutes away from the Madison River, the Yellowstone, the Henry's Fork. You have 5 blue ribbon trout streams that you can go fly fish. And so I ignored the profit driver of Yellowstone National Park and targeted fly fishermen. and set the property up specifically for fly fishermen. When they came to my property, they had everything they needed. Even when they checked in, a hand box or custom box of flies that were hand tied flies for the area and the time of year and the area that they were coming in. They had a map that I drawn them of saying, okay, around this bend there's a fallen tree, go fish behind that. Like everything was to make that experience of fly fishing like top notch, right? They had wader drying stations, they had drift boats available, they had everything they needed for a great fly fishing trip. Well, my neighbors rented their properties as well. A lot of us in this area rented our properties as short-term rentals. And some of my neighbors, frankly, had nicer cabins. They were in nicer cabins on the same lake. And I would get double the nightly rate because I spoke specifically to a target audience, but I knew what that target audience wanted because I was them, right? And so if I was just going to try to do that on an audience that I didn't understand, sometimes you fall flat. So start by being part of that target audience, because sometimes we think, well, maybe I'm not going to make as much money with that. As Nashville's a good example. What if you buy a property in Nashville? It's the bachelorette capital of the world. You know, I mean, it is where bachelorette parties happen. But does that mean that's the only target audience you can go after in Nashville? Absolutely not. There are some smaller niche targets that you could specifically go after that when you speak to them, you're going to stand out like a sore thumb because everybody else is speaking to this big target audience, right? So there's a lot of different ways you can go about it, but the target audience is key throughout the process to really set yourself up for success.
I definitely want to hit on what you just talked about that unique experience. Before we jump into it, how are you marketing these properties so that you are attracting the right type of customer? I mean, what are your photography? Are you doing any kind of keywords? You know, is there anything in the title? You know, what are you doing to stand out so that you do catch that fly fisherman for these particular types of short-term rentals?
So one, it starts with it starts with photography, right? So it really starts with, a lot of people want to, and when they talk about marketing, it's like, okay, what platforms, what keywords, what are some of those things that we think about? Like, okay, how do I get in front of those people? What does 95% of the heavy lifting for you on your marketing is having a really good offer, which our offer is the home itself set up to deliver a unique experience, and then being able to articulate that on any platform, right? And so the better we can articulate what we have to offer, the more people are going to find it, and our audience will find it. Well, how we articulate properties is through photos, right? People aren't going to go through, read the descriptions and everything else until they're about ready to book. Mostly all they're going to do is scroll through photos. And so I have to be able to take what I have and be able to paint the picture and tell a story with my photos. And I always tell people that one of the biggest mistakes that people make in marketing short-term rentals is that they think that the offer that they have is the actual property. The offer we have is the experience that we're providing our customers, right? And so if you're selling a property on Zillow, the product you have is the property. If your photos look like you could take them and go sell your property on Zillow, the Airbnb photos, and take them on Zillow, you miss the mark, right? And vice versa. You shouldn't be able to take your Airbnb photos, and if you put them on Zillow, it would look out of place because you're selling an experience. And if you put your Zillow listing on Airbnb, which is what most people do, most of us just get real estate photos, a good walkthrough of the house, right? They look like model homes and they're set up. I have to be able to articulate, like, I have to have pictures of the fly box. I have to have pictures of my handwritten note with the maps. I have to show them my wader drying stations, all these different things along with the home, right? The home is part of the experience, but it's how we articulate it that does 95% of the lifting for us in marketing. For example, like the last photo shoot I just did for one of our properties it cost me almost $8,000 to do the photo shoot. And people are like, holy crap. Why would you pay that much for a photo shoot? You can go get a photo shoot for $500 or $600, right? And the reason is because I need the photo shoot to be able to articulate exactly what this experience would be like. They need to walk in and think, they need to get a feeling from my property without looking at anything other than just the photos, right? And like you land when you get people responding to your listing and say, man, I just felt more relaxed when I went through your photos. I was having a bad day at work. I looked at your listing and just felt like at ease, right? This
Mhm.
property I'm talking about, it is just kind of a disconnect getaway lake property in Georgia, in the Blue Ridge Mountain area, is not too far from you, up in Blue Ridge area. And it's just for adults to kind of disconnect, get away. I say, I don't even have good internet. If you want to come here and work, we're not the right property. Right. And so
Mhm.
they have to look at that photo shoot and say, okay, I can see myself there and I can feel that I'm going to just disconnect. So whatever that is, you forget about everything else, forget about the fancy platforms, keywords, everything else. You have to dial that in
Mhm.
first and foremost. And then once you have that done, you take that and you put it on the different platforms or wherever you want to go. We do Facebook ads, we're on Airbnb, Vrbo, those types of things. But if I don't dial that in, it doesn't matter how good I am and how many ads I write on Facebook. Like, we get a lot of direct bookings, but if I can't articulate my offer through photos, those are all just going to fall flat, because we're a world that is, our customers are just going to be scrolling, right? We just scroll on phones, on computers, and everything else. And if I can't stop the scroll with my photos, I'm not going to be able to articulate at all what I have. I could have the best property, and if I can't articulate it, nobody's stopping.
So it starts with, hey, where would you want to own? Because you're more aware of what your own needs and wants are. You are your own demographic. From there, it's okay, well, what kind of experience am I looking for? Maybe looking back at where have been some times I've just been blown away and really wowed. Crafting and cultivating and creating that customer experience roadmap. And then to stand out and capture that, you then take that customer experience roadmap that you technically want them to have and try to translate that into photos that highlight that experience, and that goes on there, and that's how you're able to attract and stand out from the crowd.
Absolutely. Yeah, exactly. And it's that exact process. Now, sometimes it's a little harder to pull off than we think, right? So once you dive into it, you'll start to realize, okay, but that is exactly, in a nutshell, how to be in the top 20% that makes 80% of the money.
Wow. Yeah. So you just completely ruined my whole idea I had for Airbnbs. I thought it was going to be so cool here in Nashville. I was scrolling and I was clicking and I was seeing some commoditization. This was probably 4 or 5 years ago. And we were looking to build a short-term rental portfolio. And then Nashville changed the laws. And, if it had a residential zone, you couldn't. So all this stuff was kind of up in the air, and there's just too much risk for us to go and buy and build these Airbnbs. And we said, we're just going to kind of hold off and see what happens here. But I kind of kept up with the market, and I saw it becoming commoditized. And I saw that you are going to have to deliver an experience in order to stand out. And if you can deliver that experience and especially tap into those emotional moments, like weddings, et cetera, that people are just willing to pay a lot more money for, I was like, man, you can kill it. And this is what led to my amazing, but now not so amazing idea. I was like, dude, I want to make Austin Powers bachelor pad Airbnb. But I'm not Austin Powers, and I don't even know what customer that would attract. Probably maybe a bachelor party or something like that. I just thought it would be really cool and stand out from the rest of the crowd, and everyone can kind of, hey, Austin Powers. And I remember that. How cool would it be to stay at like his bachelor pad? But I'm rethinking the whole thing now.
Well, to your point though, like you said, how it would be fun. Like you just said, I think it would be cool to be there. So will somebody else, right?
Yeah.
You don't know. Like you said, you're not Austin Powers. You don't but you know enough about that. Okay, I know what that pad. I have a vision for that pad. Somebody else is going to think that's really fun too, and so don't overthink it. Like there's a lot to, especially if you think, okay, that's going to be really fun to go do. Like I buy properties in areas that I've never even been to before, but I love the outdoors, for example. And like the one I was just telling you about in Blue Ridge, I've never been to Blue Ridge. I live in the Western Mountains, and but I love the outdoors, went there, loved it, fell in love with just kind of the vibe of it. And then all we do. So sometimes your theme is really in the face, like an Austin Powers bachelor pad, right? In like a bachelor party. Sometimes it's like my fly fishing one. Sometimes it's the bachelorette parties. Sometimes it's just, okay, I just need somewhere to go disconnect and unwind. And it can be subtle like that as well, as long as it is some sort of an experience that you can identify and then be able to articulate that.
Now, I know that this industry is constantly changing, like, many other industries. It's, adapt or die. Does your company or, mentorship program, do y'all teach any type of process that says, hey, every 6 months or every year you perform this kind of audit on your competition? And do you have some kind of framework that allows you to continue to differentiate? I love what you just said, create the experience, right? Everyone else is just kind of just throwing it on the market. Hey, it's available to everyone. You're going, no, we're going to go after fly fishermen. But for those Airbnbs that are your competitors that have also figured out the fly fisherman thing, are there any steps or frameworks that you use to try to differentiate your product?
Yeah, it's a great question. And we do audit our properties. We suggest auditing your property performance. I look at it monthly, but you should do a full audit about every 6 months and look at the top properties in your market. Hopefully you're one of the top properties in your market. What you will find, and it's very, very interesting to me, is because I've been talking about this stuff for a long time. We've got about 2,000 active investors in our community, in our higher end mentorship program. And everybody's like, well, everybody's going to kind of copy what I do. And in theory, a lot of people will say, okay, yeah, I'm going to go do that. In reality, very few people do. Very few people take those steps to actually go put it together the way that you would put it together. And so I always tell people it's really, really crowded and saturated in the middle of most markets. The top of the markets are not that saturated and crowded. And so if you're not at the top, go audit the top properties and say, okay, success leaves clues. What are these top properties doing that I'm not doing? And if you are in the top and everybody starts to come in and now all of a sudden what you're doing is kind of getting watered down, yes, you do have to raise the bar and step it up. When I started this, if you had a model home looking property and it just had professional photos, that was raising the bar, right? Instead of somebody just walking through grandma's cabin with their cell phone, right? Mm-hmm. And so the bar is going to continue to raise, which is why it's important to continue to audit and say, okay, what else can we do? But we're in the experience business. And so anything we can do to elevate the experience that our guests are coming to enjoy and have when they're at our properties, that's really when we do audits, we're saying, okay, what can we do to raise the bar for the experience?
Mm-hmm. Yep. Every time, everything's moving towards that experience. I joke that,
everything. Yeah. And really, Brandon, that's like business 101, right? The customer experience is business 101. It's how we get raving fans and repeat customers and referrals and everything else. It's no different in the world that we're living in as much as it is if you're selling, anything on just any business. Customer experience is key.
100%. I want to move up the towards more the top part of the funnel on a little piece that I missed. You said that one of the best ways to figure out where you want to buy is, where would you want to buy? Where would you want to your own? You are your own customer, but there's certain areas that probably don't have enough revenue or tourism coming in for it to make sense. What pieces of maybe software or information are you looking at just to verify that, hey, there is a market here in this specific area, right? If I go buy something, there's going to be enough of a piece of pie for me to go take to actually make it make sense. Are you using AIRBNB or any other platforms for that? And then what's that top line revenue maybe that you're looking for?
Yeah, so we look at, we use AirDNA a lot. And so AirDNA, we use their paid versions. They've got some enterprise investor account stuff that really helps us dive in. I always tell people it's a lot easier to stand out in a crowded market where there is demand than go into a market and create demand. And so it is important to make sure that there are dollars being spent, there are people going there. We're looking at most markets. We want to see a market, and normally we're looking at the overall revenue that a market generates. But more importantly, we're looking, okay, how many properties are actually in the market? If it's not 100 or more properties, we typically start to say, okay, maybe that's a little bit small. Not that some of those markets can't work, but now you're starting to have to really look at them a little differently on the underwriting, understand that there might be a little more risk there because you're going to have to go create some demand because you don't have people looking there, right? There's not a lot of people coming there. And so we want to see 100 active properties that are getting some traction when we're looking at a market as far as the size of the market.
Okay. 100 active properties. That's pretty
Yeah.
straightforward there.
And when you look at like if it's investable or not, like one, you can just go on Zillow and find out what your acquisition price is, right? And let's say your acquisition price is $500,000 for this particular market. When we look at the revenue that properties are generating, you need to generate about 10% of your acquisition price of gross revenue to break even. And so I have to see properties making $50,000, and that's just my break even mark. And so I need to see that average revenue somewhere above that if I say, okay, I want to make any money, right? And so if I'm paying $500,000, I want to be able to see that I can have the potential to make $65,000, $70,000, $75,000 in order for me to have any money to be made in that market. And so we look, that's where the kind of that ratio lies. And I run that 10% number based on having a loan on the property, having management in place, running the property for you. So because that's that's a lot of gross revenue to be able to break even. A lot of people are like, man, I guarantee I could do better than break even with 10% of growth of the acquisition price on a property like that. But the reality is the way that we do it, I don't want to manage my own properties. And so we have to budget and underwrite that these properties are going to be managed by somebody else.
What are some of the biggest mistakes that you see investors that get into short-term rental properties make? We've covered a lot here, right? Not differentiating, not having the right target customer, not understanding the numbers that you went through, which were fantastic. What are some of the other cons of this industry if people are green and don't?
So I would say two things, Brandon. One, this asset class can become a full-time job really quickly. And they can become very active and not passive at all if you're not careful on how you set them up. Managing a short-term rental, you got people checking in and checking out daily, you've got communication daily, and so there's a lot that goes on, and there's a lot of tools that can automate it. But I've been in this game for a long time, and it is less than passive, very much not passive if you're going to manage your own properties. And so if you're looking for an asset that can turn into passive, make sure that you're planning and underwriting to have management in place. And that's going to be your biggest expense. It's going to be close to 30% of your gross revenue. And so make sure you do that. The next biggest mistake that I see, and it's especially prevalent right now because of the last 3 years that we've experienced since COVID. COVID just skyrocketed short-term rental success. And like I was telling you before, having a short-term rental was like having toilet paper during COVID. And they all made money. And one of the biggest mistakes, and it goes back to a lot of the previous conversation that you and I had, is you have to be less than market dependent. If you're just going to ride the market waves, it's going to be a wild ride. It's going to be an up and down ride. When you're thinking that it's very much market dependent, you have to look at this and say, okay, this is a little business, and I have to have a great customer experience. I have to have the right property in the right area. I've got to set it up to deliver a unique experience, have management in place so it doesn't become a full-time job. Then I've got to articulate it in marketing. And so there's a few things going on. And if you think you're just going to buy a short-term rental in a hot vacation market, put it online, you're just riding this market wave, and you're going to have some good times, but I promise you're going to have some bad times. It's going to be a bumpy ride.
Yep, 100%. Well, dude, I've really enjoyed this. This has been fantastic. I've learned a ton. And when I start my short-term rental portfolio, I'm probably going to be reaching out to you, and I'll probably end up joining your mastermind group. For those that want to learn more about you, where do they go?
Yeah, go to Vodyssey.com. It's VODYSSEY. And we've got a lot of free trainings on there, kind of our philosophy, our view of this world. If you're diving into short-term rental ownership, we're all about owning these assets. And my goal is to have people walk into this game with their eyes wide open. Obviously, we have a mentorship program. There's nothing online about that. It's by invitation only. Go get a copy of our book. There's ways to get a hold of us if you're interested in that, but lots of really good, hopefully, information that can help you and even our book takes you through that 9-step process, and we'll dive deeper into some of the topics that you and I were discussing today. You can get that for free. You can go on Amazon and grab the hard copy, but you can get a digital version on our website at Vodyssey.com.
What's the name of that book?
Book's called What the Hell is a Lifestyle Asset?
Go check it out. What the Hell is a Lifestyle Asset? Shawn, again, I appreciate you having you on. It was great to meet you.
Awesome, Brandon. Appreciate you having me.
See ya.